Meanwhile, Wall Street looked like it was set to face more selling pressure on Tuesday after stock futures were showing flat overnight and investors struggled to gain ground after that steep sell-off. CNBC reported S&P futures and Dow Jones and Nasdaq 100 futures were all trading lower. Now, back to Morgan Stanley's India outlook, which is definitely more bullish. It said that valuations now are most attractive or the most attractive since COVID-19. That gives you a clean 5-year horizon. This is likely to be a stock picker's market in contrast to one driven by top-down or macro factors since the COVID pandemic. And that's, of course, an interesting way of looking at it. For the markets to stage a recovery from here on, most crucial cue, according to Morgan Stanley, will be global factors, including US policy and global growth rates. Well, they also said that a global recession or a near recession will challenge their call and keep Indian equities off the highs in 2025, though their picks are cyclicals, defensive, small caps, mid caps, and large caps. More specifically, they are overweight on financials, consumer, discretionary, industrials, and technology. And the top stocks that they are overweight, so if you want to keep a watch in whichever way, is Jubilant, Mahindra & Mahindra, Maruti Suzuki, Trent, Bajaj Finance, ICICI Bank, Titan Company, Larsen & Toubro, Ultratech, and Infosys. The larger pitch is that India will be the world's most sought-after consumer market, will undergo a major energy transition as energy consumption increases per capita. Credit to gross domestic product will rise and manufacturing could gain share in GDP. All of these are, of course, somewhat general trends which are all likely to materialize. The time frame, of course, could vary for some of those cases. However, Morgan Stanley does talk about a consumption recovery which is expected to get broad-based as the income tax cuts propel urban demand to support the buoyant trend in rural consumption levels as well. So now, whether those income tax specifically trigger consumption jumps is something that we have to see, and that's a question I'll be posing shortly again as well. Now, that's in India. It is a fact that global flows could shift around in coming days given the massive selling that we've seen in the US markets. Interestingly, Citigroup has downgraded US equities to neutral from overweight while upgrading China to overweight, saying that the US exceptionalism is at least on pause. Citigroup has been overweight American stocks since October 23, and now things are obviously changing. And they also said that Chinese stocks look attractive even after their recent rally, given DeepSeek's AI technology breakthrough, the government support for the tech sector, and still cheap valuations. All points to note. Back home again, I spoke with Sumit Jain, Deputy Chief Investment Officer of ASK Investment Managers, which calls itself India's largest discretionary equity portfolio management services or PMS house. And I began by asking him how he was seeing the shift in flows and how markets were looking in coming quarters, and also where he was looking for value and in what kinds of sectors.
The kind of impact that Indian markets have seen, at least from the selling perspective of FIIs, it has been very sharp. It has been more than $10-12 billion in just about few months. So this kind of selling actually also led to a lot of money moving towards United States. As you rightly said, that with the fall in US, we may see some of these outflows actually receding. In fact, this is not the only factor. We really believe that the outflows actually has been driven not only by global vagaries, but with also from the perspective that Indian earnings have not been great. We are at a stage where for few quarters now, our earnings growth has been single digit. With all the steps that have been taken in many of the areas, there is high chance that next year we should be mid-teens in terms of earnings growth. So multiple factors actually now can contribute to how FI flows can actually play out. Global stuff which actually can alter the course, and also some semblance of earnings growth in the country. So which is why we believe it's only a matter of time that we start to see FI flows actually, outflows receding from the country.
Right. So if I were to take a step back, if you were to look at the way the Indian markets have been behaving in the last, let's say, 6 months to a year, they appear to be tracking Wall Street. They, of course, decoupled in some ways from China, other emerging markets. Are you getting a sense on how things could move in coming months? I mean, sort of India move differently from others. Could it track something else?
In the short term, when foreign flows are concentrated in a significant manner, and when these foreign flows are globally linked, those can have impact on our markets. It's not that India is completely decoupled. When you think about India from the perspective of merchandise trade or services, these two contribute between 20 and 25% of our GDP, right? They can get impacted by global vagaries. However, with all the changes that are happening in global supply chains, we believe we should be net beneficiary of the uncertainties that world is presenting. But there are a lot of or many parts of the country which are really domestic linked. and which are relatively more insulated with how things are happening globally. Those would mean businesses in rural economy, even domestic consumption to a great extent, certain manufacturing related businesses. We really believe this is a phase where we should start to see gradual improvement in many of these areas.
You touched upon earnings outlook, and you said that one reason why there has been outflows, of course, the perception and fact of weak earnings, which you're saying now could recover. How's your sense? I mean, we are now in March, heading to the end of the quarter and year, financial year. How are things looking?
In the short term, possibly earnings may remain subdued, but we are already seeing steps that have been taken up by the government. In many areas, we are seeing project execution, seeing acceleration. Even the impact of tax cuts that have been announced in the latest budgets, and also quite a few of the incentives that are being given by state government, should mean that we should start to see earnings acceleration over period. Is it going to happen pretty sharply in the short period of time? Probably not. But clearly, we would see improvement possibly in quarter or 2 quarters. Really difficult to say whether it's necessarily going to be this quarter or next. But next year seems relatively better than what it is looking like versus FY25. So we think that possibly mid-teens kind of earnings growth is something India Incorporate should kind of deliver.
And when you say project execution, you mean public spending and government spending?
Yes. So government's focus this time is to make sure that the budgets that are there, which have not been met, at least if you think about FY25 capex number as well, which was announced in the budget last year, will not be met. So to that extent, this would be low. So the focus is how can we meet the revised numbers that have been announced.
What are the themes, and I know you're following a few that are standing out for you at this point of time in the context of all of this? Muted earnings, valuations under question, flows steady, at least overseas. Domestic, of course, flows seem still strong. So, what are the sectors that are looking good to you and why?
Before sectors, I would first like to talk about what would work in markets at the current point. Last 3-4 years, markets have behaved in a particular manner. We believe we are back to 101 of investing. Focus actually has to be really high on what is the quality of business that you're buying? What is the quality of management that you're buying? What is the execution prowess that those managements deliver? This execution prowess actually has to show up in a superior profit growth. And this profit growth in isolation is not enough. This profit growth actually has to be backed by superior capital efficiency. Since we are in an era where uncertainties are increasing, we believe that markets will start to value those businesses that have ability to deliver a superior compounding over long period of time. So those businesses possibly should start to see valuation polarization. Having said that, we believe there are a couple of opportunities in multiple areas, be it discretionary consumption or even the entire healthcare ecosystem, businesses in manufacturing, businesses like energy transition, circular economy, logistics. Many of these areas we believe offer very interesting opportunity from secular perspective in the country.
When you talk about superior compounding over a period of time, now, isn't that what has already driven valuations to this level, or you still feel there is opportunity before I come to the sectors?
See, last few years were an era where earnings growth for India Incorporated itself was 20% plus. Now we are into an era where earnings growth possibly from FY26 onwards should be in mid-teens. That would mean not all businesses would be delivering profit growth at that breakneck speed. So markets actually will now start to segregate those businesses which are delivering versus those which actually got lifted when tide was going up. So to that extent, execution will start to make a big difference.
So you talked about consumer discretionary, and that was seen to be getting a lift because of tax relief to middle class India. Has that played out in the way people were expecting it would, or is it looking like it's going to play out like that?
It has played out partly, but I think there is more to come there. So few businesses in tourism, few businesses in jewelry, I mean, those premium discretionary consumption actually did well. With tax cuts that have come by, which will start to show up from next year onwards, there would be relatively higher money in the pockets of the population. Right? That coupled with relatively lower impact because of inflation, we really believe those small ticket consumption should actually start to see improvement. Even rural economy, which has already started to show some improvement. As I mean, post up this quarterly result season, many of the managements have been talking about improvement there. That should kind of continue.
And you talked about healthcare and its many constituents which are looking good to you. So can you walk us through that?
Entire healthcare ecosystem actually have many subcomponents, and every component is different. So when we look at healthcare ecosystem, we really believe domestic branded formulation businesses offers huge stable growth over next many years. Similarly, CDMO, while current uncertainty may have some impact sentimentally, but India has logical reasons to be significantly bigger in that space. Similarly, US pharma generic space, we believe that the rate of decline is kind of slowing down. And even if you think about drug shortages there, they are kind of increasing. So that is one area. Similarly, on the infrastructure side, with respect to pharmaceutical, the entire space of hospitals, diagnostics, medical consumables, those also offers very interesting opportunity at the current point in time.
And you feel if I were to stick to healthcare, many of these areas, valuations are still attractive?
See, what we are looking for in this area is what kind of growth can these businesses deliver over next many years. And we would start to see these businesses getting a lot more organized. Think about medical consumables. This is a significantly large industry. A lot of it is imported. There are huge smaller guys there. As we start to see consolidation in this space, we would see significantly decent growth for many years into future. So when growth runway is significantly longer, at that point, looking at short-term overvaluation, it can't be significantly overvalued, but slight overvaluation, I think market would be ready to live with that.
Right. And that's an interesting example. And Sumit, thank you so much for joining me.
Thank you, Govind. Thanks for having me here. It was great talking to you.